Hello, everybody. Welcome to the Realignment YouTube channel. Marshall is not able to be here today, but we have an excellent episode. It's with the authors of The Cult of WeWork, Adam Neumann and The Great Startup Delusion, Eliot Brown and Maureen Farrell. I think you guys are going to really enjoy it. This is a little bit of a different take on the whole WeWork situation and all of the craziness which down there. Let's get to it.
Eliot and Maureen, welcome to the Realignment.
Thanks for having us.
So let's just start here. I'm sitting in New York City after a year plus of the pandemic, lockdowns, really terrible remote work setups. Listeners who listened to our early, really poor Yeti mic'd episodes will remember this back in August. And honestly, I love WeWork. It is such a good idea. I went to a WeWork last week and worked to prep for the show, ironically. Well, okay, I did that on purpose. I was trying to set up a narrative there, but it was great. So let's just start by talking about that part, because a lot of people are seeing the WeWork story and it's 2019, it's 2020, it's this big failure. It's all ridiculous. It's fallen from high $40 billion plus of value to sub $10 billion of value. But I just see it. I'm like, wow, I would invest in this company right now that it's at a more reasonable valuation, because the underlying idea seems so suited to the moment we're living in. Hybrid work, corporate offices could create a remote office that fits better. So can you all just talk about WeWork as a company today?
Yeah, sure. I'll start. I think one of the funny things about WeWork is it is a rather sort of objectively large company now. They have, an enormous amount of square footage and desks around the world. And that is this result of essentially a subsidy that they got a few years ago from SoftBank and all these other investors when they thought it was a tech company. And so, yeah, one of the byproducts is that you have, 700,000 plus desks now strewn about the world at a time that it might actually be a pretty good time to have a lot of desks that you rent monthly or yearly. It's sort of no one really knows what's going to happen post-COVID, right? Where everyone's going back to work. Some people are going back to the office, some people are staying home, and everyone has different theories. But one theory is companies are going to be a lot more uncertain or just want things more temporary and more nimble. And so they're going to run to something like WeWork. So it's kind of, fortunate for them that they took $12 billion is what they raised over time and put it into a company worth $8 billion, but that gives them a lot of desks.
Yeah, I guess that's my question, Maureen, is the current iteration and strength of WeWork today, is that simply a function of the billions of dollars of capital that was pumped into it, which enabled it to build a brand, get a bunch of desks, have all this real estate, ultimately give them, Scott Galloway says this all the time, which is when you say you're going to get an office, you say I'm going to get a WeWork. You're not I'm going to get Industrious. Although apparently Industrious is a very good company. And I can't remember, there's a UK based one, which is worth
IWG.
IWG, right. IWG is worth billions of dollars. Good business model, but let's be honest, nobody knows what the hell IWG is. So is the competitive advantage that WeWork brings to the field, is it its culture, is it its physical building, or is it the fact that it became an element of the zeitgeist as a result of all of the billions of dollars that were poured into it over the years?
I think it's a little bit of all of that. It became part of the zeitgeist. You know the name. Maybe right now, as you're saying, if you're thinking, oh, I need office space, you'll probably think of it first,
right,
all around the world. But the billions of dollars, there were a lot of co-working spaces at the time of even when Adam Neumann, they predated Adam Neumann and WeWork, but there were a lot popping up in New York. Just no one or a few people with IWG as an exception were going as global. So the fact that it's, everywhere around the world, these spaces is the result of these billions and billions of dollars that were put into it. Why the spaces are designed, they look really cool. That's the difference between IWG in particular and WeWork. There is an aesthetic that WeWork has that's been mimicked a lot. But you walk into most of them and they're very cool looking too. You kind of want
nice.
Yeah.
Yeah.
Something I wonder about, especially when it comes to the aesthetic, is I'm wondering how much of a generational thing this is. So I was watching Hulu's WeWork documentary last night to get a little bit of visual perspective on all this. And the number one thing I just noticed is it feels so late stage millennial. WeWork, the hustle porn, the hashtag girl bossiness of it almost. There's all these like trends which are now deeply unfashionable, but at the same time made a lot of sense in 2014, even down to the company culture and the partying, the way people were partying. So I'm just curious, how much of this is a specific generational reality as you're looking at this company and that aspect of it? Because I definitely see, I work with a couple of cynical Gen Z people, and they do not seem like they are the target market for this specific setup and everything.
I mean, yeah. I'll just jump in with one. I have one point of reference is that my niece is just graduating from Georgetown, and she's, heard my stories, knew I was writing a book, but Georgetown took over space. So they had the option to use it this last year. And she was like, oh my God, I finally went to a WeWork. We were just able to work there and it's awesome. So that's all I've got. But it seems like it's appealing to her and her friends who are, I don't know what generation, what is it, Gen Z? If you're about to.
Yeah, she would probably be Gen Z.
So she thinks it's cool still.
Okay.
Eliot, what do you think?
Yeah. I mean, TBD, I guess. I don't pretend to have any idea what post-college grads are thinking in life. But one of the reasons that WeWork took off was not because it was this totally genius idea, but I think it's like they happened to really just like hit this vein of cool design mixed with millennials who were like, I don't want sterile, boring offices, sort of the revulsion from the Office Space movie, generation of cubicle farms. So like, my guess is that doesn't last forever, right? That's a sort of a temporary thing and trends change.
Yeah, I just don't know. It really collided exactly well with that like post-office generation. And like Marshall was saying, this like, it was very characteristic, I think, of the late Obama era. And obviously that's when it was born. Whenever WeWork collapsed, I think I, like a lot of people, was just like, I don't understand. I was like, I don't get it. Like, how does a company be worth $40 billion one day and then the next day it's not? Is it worth anything? We know now it is. I think what you guys can help us provide some insight on. At this point, everyone's heard the podcast, the documentaries, Adam Neumann, he had this magnetism, and he was barefoot, and he's like a total weirdo, and all of that. People know that part of the story. But let's think about across the table. Who are these people who are sitting across from Adam Neumann and write him checks for billions of dollars? What did they see at that time? Walk us through their thinking as the company, let's say from the beginning up until, the entree of their big investor, Masayoshi-san, which we will get to. Go ahead.
So I'll start. And yeah, this was sort of like the central question that we took on, and we say this in our author's note. Like, I mean, this question of like, how did this happen? How was like literally the country's most valuable startup this total mirage? And how did so many people get fooled? How did they raise the second most amount of money ever for a startup beyond Uber? And, the answer is that WeWork, Adam Neumann, this kind of really good salesman, collided with this essentially like a whole financial system that was thirsting for Silicon Valley innovation and disruption. And sort of, there was just so much money just suddenly excited about Silicon Valley that it was, it just created a mini bubble. And it was very, easily skewed to do silly things. So, I mean, the first kind of chunk of money came from venture capitalists who, in the old days used to invest more in companies, but in the past 15 years, they've become much more obsessed with this meme of the founder and like the person who they're investing in. And so like Founders Fund, which is Peter Thiel's fund, even says on its website that it looks for founders with messianic qualities, near messianic qualities. And so like Adam Neumann just kind of like checked all these various boxes of these things that they happen to be looking for, of people sort of emulating Mark Mark Zuckerberg and channeling Steve Jobs. And he talks this huge game of like, I'm going to disrupt everything and take over the world. And it's like, well, you have 2 locations. But that's exactly the stuff that these venture capitalists in Silicon Valley want to hear, because they want to get 100 times their money. And a bunch of times it doesn't work out. But if it works out once, then you make a lot of money. So yeah, I guess that was sort of step one. And then like over time, maybe Maureen can talk about this. There were just a bunch of other sort of like keys that turned and unlocked in the financial system, basically doing the same thing.
Yeah, it basically step of the way, the story is sort of like private capital is plentiful and, the supply is so huge of it. And, Adam Neumann knew how to make himself and the company seem like a scarce resource. I mean, he just knew how to play investors every step of the way, whether it was the venture firms, the banks, the mutual funds. And, I guess the thing was, it's like it could have been a used car salesman or whatever, but it's like, if you don't get it right now, you're going to miss out. And he took it to whether Goldman at one point was about to invest in his company and he just didn't like the valuation. They were about to run out of money and he just said, no, I don't want it. And he wound up he would be right. He would get people to come in. There were just so many people waiting at the gates to invest in his company. And he knew how to make you scared. If you didn't get in right then, you're going to miss it.
Yeah, I guess one of the sort of main takeaways we took is that WeWork had a bunch of Theranos. I think people look at that and wonder how it's similar. That had a bunch of unsophisticated investors, like Betsy DeVos, Rupert Murdoch, putting money into essentially a lie. WeWork had a bunch of really smart investors doing dumb things. So these were not dumb people, and some of their choices were even rational. But we have the example of the mutual funds, which are generally pretty boring, right? They are where we put our retirement savings. You had these kind of managers there really realizing they needed to get returns and they couldn't get it on the stock market. So they were plunging money into things like WeWork. And one of these guys at Fidelity, smart guy, a successful manager, but he was just totally kind of taken in by Adam, who was like, let's have tequila shots, and then just paints this vision of the future. And he gets really excited about it. And we saw this again and again at different levels. When the Fidelity manager went to his subordinates and analysts and said, well, we're going to do this. What do you think about it? An analyst came back and was like, this is a real estate company and it's really overvalued. And yet Fidelity invested. The guy pared his investment back a little bit, but it was still that they gave him like over $200 million between a couple managers there. And this is despite subordinates like coming to the obvious conclusion, but the sort of smart people at the top were too fixated on sort of other things and fear of missing out.
And Fidelity passed, at $5 billion. And this is when they actually went in, it was 6 months later at $10 billion.
Ooh.
So here's the question, because the subtitle of the book is, refers to the Startup Delusion. I want to get into what actually is the delusion here, because if you'll give me a second, Eliot, you identified 2 different things that are kind of happening here, and you as well, Maureen. One, there's this belief in messianic founders that Adam Neumann is this ubermensch who can will a company into being, can start with a green desk thing and a couple crappy companies, but then turn that into a really huge exit for everyone. And then there's this belief, especially at firms like Founders Fund, that focusing on finding those founders is, by the title, kind of what you're kind of supposed to do. So that's one thing. The other thing is this idea of, especially during the 2010s, let's look at these really big markets that if you could identify a tech disruption, quote unquote, you could fundamentally transform them if you're willing to fund these a lot. So yes, Uber. Does Uber make money? No, it's not quite profitable. So let's invest a lot of money so it can basically take over markets and disrupt the taxi industry and get really big. And then someday they'll come up with a effective business model. So what I'm getting at is, it seems to me that I can do a speak up real quick for the not so humble founder in the sense that like Mark Zuckerberg is one of these founders, right? Mark Zuckerberg, I wouldn't say he has the, like, because of a variety of public lack of charisma issues, he's not doing the messianic Jesus thing, to quote Scott Galloway. But at the same time, he is very aggressive. The company is very centered around him, but he really makes it work because the model of a software company is different than the model of subsidizing something like Uber. So can we just get to what the actual delusion is? Is the delusion Founders Fund believing in founders, or is it this belief that narratives can supply massive valuations and massive amounts of funding without the unit economics getting figured out?
I don't know if you love this, but it's sort of both. I mean, they're the same thing where you're just believing something is much more big and common than it is. So in the same way that you believe that just because there's Jeff Bezos, Steve Jobs, and Mark Zuckerberg, that they're, basically everyone you meet is likely to be that. That's just not likely. I mean, now you have a lot more founders with founder control who run their whole companies despite having a minority stake, all because essentially the money is saying, well, you're probably messianic and visionary. So I mean, that's one bucket. But then, I think that the subtitle probably refers more to, and certainly something we spent a fair amount of time looking at, was just this craziness, especially in the mid 2010s, where everything was a tech company, no matter how obviously it was not a tech company, and raising money at a tech valuation. And then everything was going to be bigger than you thought. So like, it was never enough. So with Uber, right? Like Uber makes this really amazing app that completely disrupts like the way we get around cities. But that wasn't nearly enough, right? Like they had to say like, oh, well, we're going to make our own self-driving cars. We're going to get into flying cars. We're going to disrupt walking with scooters, right? Like we have to be the Amazon of transportation, because apparently it's not big enough to completely disrupt the way people get around it in a car. And so that's why Uber raised so much money. And actually like the vast majority of the money that Uber raised has performed terribly. It's like literally flat since 5 years ago. And the NASDAQ has tripled. So that the same thing that was going on with Uber,
what do you mean by that? The flat and the NASDAQ has tripled. Can you just explain that? Sure.
Yeah. So in 2015 and 2016, Uber raised like $4 or $5 billion at, the share price is still corresponds to its publicly traded share price today. And so the share price is, I think, literally exactly the same. It's $48 a share. And if that's fine. It's like, well, you didn't lose money, but in the same 5-year period that's happened, the NASDAQ has tripled. So really, if you were moving your money where just putting it in the stock market, you would have done a lot better than funding a overvalued ride-hail company that was at the time considered the Amazon of transportation. So my point is with that is like there were just a zillion that created this whole ecosystem of these other essentially fake companies where there were 3 valet parking companies that would be the Uber for valet parking that just hemorrhaged money as they took your car and you gave them like $5 and, they probably spent $20. I mean, there were a zillion things. There was the Uber for cookies. There were a lot of Uber for everything. And we were
no one's writing a book about Uber.
I remember
for cookies.
Uber Nurse was it.
Dobies, IRP, RIP.
Yeah, please,
go ahead,
Sagar.
Marshall.
I actually just want to, because Sagar and I get in this fight all the time, and I think this fight is over Sagar being a little more of a pessimist and me being more of an optimist. And I want to throw this to both of you, Maureen first. What does fake mean? Because I think this is where people get the most reactionary about whether they think a thing is fake or not. So for example, Amazon, for a large part of its early existence, by many definitions, is a quote unquote fake company in the sense that it's not profitable. It's not performing quite where it wants to perform. And now 20 years later, obviously it's freaking Amazon, right? And there's no debate here, media credentials aside, about whether or not you would put money into Amazon when it first starts up in the 1990s. So when does a company, when does the process of venture capital, aka putting money into something that could 10x to 100x, when does that transform from propping something up to turning into something real? Because I'm trying to understand the distinction between fake and just what venture capital is by definition.
It's a great question, and I'm sure you'll never guess which one of the two of us is the optimist and who's the pessimist. It'd be hard to figure it out. But basically, I mean, what you're explaining is essentially venture capital. I mean, there's a period of time where money's lost. You don't quite know what this is going to be. And then, this company kind of explodes. And Uber and WeWork did take over the world. There's just, to the fake question, will they ever make profits like Amazon has or Facebook? Even I remember right after their IPO, it was like, gosh, this company is such a disaster. And we could have a whole nother argument in terms of what it's done for democracy and everything. But for shareholders, it's been a winning bet. So I think that it is this sort of like the existential venture capital question of when it transforms, and it's kind of like, when you see it, and there is this, the suspension of disbelief for a long time. That's what venture capitalists are in the business of, like these industries that haven't been created before.
I think you're onto something there. It really is it's like a judicial, when you see it standard. Like Amazon, it's like a money printing machine. They need money in order to expand more products, buy more warehouse, but the fundamental product is sound. And I think Bezos did a very good job of not like chasing crazy valuations and keeping it on a generally steady foot. Whereas Neumann, it seemed, let's talk about this, which is that, did he really believe that this company was going to be not just a unicorn, but like $100 billion real estate company, which was going to take over? We were going to change the way people live. We're going to change the way people go to school and all of this. At the same time, as I understand it, his personal financial decisions in terms of cashing out hundreds of millions of dollars in the middle of deals is extraordinarily extraordinarily different from how most people who are founders who actually believe in their companies would act. As in, if you really think you're going to the moon, you're $100 billion, why would you cash out at a $10 billion valuation? And that's why, even though he got kicked out on his ass, today's worth like $750 million. What do you think, Eliot? Like, if you can break down the psychology of Neumann.
That one's hard.
In 30 seconds flat. Yeah, just figure that out.
What you hear a lot from people around Adam is Adam had this totally amazing way of justifying absolutely everything he did as right and believing everything he did. So I think he drank his own Kool-Aid, and really, I really do think he thought he was going to build a multi-trillion-dollar company that was going to be the world's largest. And by 2018, like we really get into this in the book, like he was really kind of losing grip with reality and saw himself on par with heads of state and thought he was going to live forever. And, was snubbing, like nearly snubbed Theresa May for an event. So I think he believed that, but yes, it is funny how it works out that he did make what turned out to be incredibly rational financial decisions to take out hundreds of millions of dollars. So he wasn't an idiot. Then again, he did, toward the end, borrow money again in a sort of advantageous way to him, but and also for tax reasons. He had a huge stake in WeWork. So like he was thinking he was going to be a trillionaire.
I want to throw this question to you too, Eliot, because you covered real estate. If we're actually, once again, I'm putting on my optimist hat here, I could just imagine, especially maybe I'm infected by the knock on wood, post-COVID thing. There's this massive market, which is just totally screwed right now. If you're in commercial, I would not want to be, obviously it'd be cool to be in commercial real estate, but I wouldn't actually want to be in commercial real estate if I could pick my various industries that you could just hold a lot of value in. After COVID, it's really been disrupted. You have these old models that aren't effective, or people who don't want to go in. There's hybrid, there's remote. There's obviously a great business for WeWork in planning company offsite retreats. There's all these different, very easy, reasonable derivatives that you could see WeWork putting together now. So just explain for us how the commercial real estate industry really looked, because something you said earlier is that you were pushing back against the idea that this is a tech company. And obviously, like WeWork, they do real estate. There's unit economics, is your point. This basically comes down to how many desks can they rent out at a price that causes them to make a profit. That's what everything came down to. A lot of things were distractions. But, if we're looking at look at a company like Disney. Is Disney a tech company? Well, they have Disney Plus, which is now like this massive streaming service. So tech when everything kind of becomes digital and tech in some respect, the distinction becomes complicated. And that obviously helps Adam really pump up his valuation. But it would be just great for you to start with talking about the nature of like commercial real estate. And then Maureen, I think what I'd throw to you then afterwards is just talk about how the narrative of like what is and what isn't tech plays into IPOs and valuations, all those technical things.
Yeah. So, commercial real estate and sort of like WeWork, I guess one of the things that distinguished this company to me when I first started covering it in like 2013 was how I thought it was a real estate company and went down to meet Adam. And he's like, oh, one thing, you're a real estate reporter. You shouldn't be covering us because we're not a real estate company. And
that's a great egg. I'm sure you've never been. I'm sure you've had your credentials challenged in different ways. I don't think that's something you were expecting to hear.
I'll tell you a funny anecdote about Jared Kushner one day. So they saw themselves as a tech company, but like, then you actually look at WeWork's numbers, and this is sort of fundamental to what commercial real estate is. Like, there's only so much money you can get out of an office on the one hand, in terms of how much are you going to rent it for? And much more to the point, you have very fixed costs every time you build an office. So WeWork's business was like, I'll sign a 10-year lease with a landlord, and then I'll renovate this space and then build, fill it with glassy desks, glassy walled desks. And each of those desks costs a huge amount of money, thousands of dollars. And if you're a software business, you can sort of you build the software, you build the app, and then people download it and pay you. And every time a new person downloads it, it doesn't cost you money. Anytime somebody adds a desk for WeWork, it costs them money. And, you take that with how like it's sort of capped. People aren't going to spend $1 million a month on a desk, even if you give them fruit water. Then, there's really only so much profit you can get out of real estate, and there's only so fast can grow organically. And so there's not also that much reason to like sort of grab the market and in the same way that you hear about that with Amazon or Uber.
Yeah, Maureen, what about the tech? What about the whole, like, what is tech and how that plays into the public markets, capital markets side of things?
Sure. So from the public markets, capital markets, I mean, everyone, as you said, wants to make themselves a tech company. I mean, because there's such a huge difference in terms of what your valuation will be. And if you, just take it, say you make $1 billion in revenue every year. If you're a real estate company, it could be maybe people are willing to value at $2 billion because you can only get so big, you can only make so much profit ever. If you're a tech company, maybe you could be valued at $20 billion. It's that big of a difference, and it changes how much money you can raise, your stock price, everything else. So there is a push with every company imaginable right now to try to build themselves as tech. Adam was somewhat early to the party, Adam Neumann with WeWork, and he pushed it very, very far and successfully as far as valuation. It just each step of the way, the metrics never changed. The revenue versus the profits. It never looked like a tech company if you looked at the numbers, but it was always going to get there, and he always raised money with that in mind. But if you look back, as we said earlier, the sophisticated investors, if they were to look back at every projection and where it landed, it never got there, but no one seemed to care.
One of the things we found in the reporting process was just like all of these pitch decks they used where they showed these investors like, here's how we're going to raise money. And it's just like this real estate company's pitch deck is filled with like, WeWork on a MacBook, and WeWork on a phone, and just showing how the app works as though like you really need a MacBook to use a WeWork. Like you literally couldn't even book a WeWork online; you had to call someone. And they've recently changed that. And then you fast forward to when they were going to do the IPO, and the bankers really bought into exactly what Maureen's saying. And so they gave Adam and WeWork these pitch decks saying like, here's how we think you're going to be portrayed. And the comparable companies are like Salesforce, Zoom, Netflix, Amazon, which, again, this is a company that subleases office space. There was not the subleasing office space comparable on there.
So let's talk about the system as it is. Have people learned about WeWork? Maureen, I guess
learned
I'll
about
kick it to
WeWork
you.
at this point.
Well, I learned from WeWork. I hear, so you cover capital markets. First of all, you can ask us you can explain to us what a SPAC is. I hear a lot about SPACs. I know that WeWork went public in a SPAC, so it is a WeWork specific thing. Has private capital changed its behavior? Does the tech bias still exist? Are companies still desperate to build themselves as tech in order to boost their valuations? Is there maybe too much negativity whenever it comes to this? Because we have a booming stock market, and I also see people going public in a private manner more than ever before. So what the hell is happening right now?
So if you ask if it had an effect for a minute, it did. I mean, WeWork's IPO got pulled, the valuation crumbled, Adam was out. And there was this brief wake up where suddenly Masayoshi Son, the CEO of SoftBank, one of WeWork's biggest investors, was suddenly telling his portfolio, the companies he was investing in, you have to be profitable, which was something he never said before. Public market investors seem to care, but that switched dramatically again sometime in 2020. And I mean, I'll just tell you, our book sort of ends around when Adam leaves WeWork, and then we have an epilogue, just sort of digesting this. And I would say
COVID happened, right? Is that the epilogue?
COVID happened. Yeah.
Is that the epilogue?
that might be one part of it if there's not too many spoilers, but it also is like, what is the market? What's the response been? And I think we rewrote that like 4 times because the pendulum had really swung that it did seem to have an effect on the market at large, and investors did seem to have woken up and been worried about another WeWork repeating itself, both in the private markets and public markets. And suddenly COVID happened, and we had this whole the Fed started, tried to help save the economy in COVID, and that sort of just led to more risky behavior. So, and do you want me to do the SPACs? Because that factor is a part of this.
I think people want to know. People don't know what they are. Yeah.
I love talking about SPACs. Yeah. So SPACs are special purpose acquisition corporations. They're essentially a pool of money. People go out, usually like a well-known financier or like an ex-CEO goes out, raises money in the public stock market, that then they say you buy into it, and they're going to go after a company. They're going to take a private company public with this $1 billion or whatever it is. And so became this sort of trendy thing. And you can imagine why that's risky. It's like you're sort of handing people a checkbook and you have no idea what they're going to buy. They can essentially kind of buy anything. And then it's a public company and you're taking a bet on that. So this year, WeWork got acquired by a SPAC. The deal is announced. It will go public probably in the next 2 months. So anyone can buy into the future of WeWork.
Yeah, Marshall.
Yeah, I know. I've finally, history circling back, and I have my massive opportunity here. Here's something because once again, the optimist side of me is just thinking here. For the two of you, I'll start with you, Eliot. Can we imagine an alternate scenario where Adam had just decided not to try to IPO when he tried to IPO? Because there was obviously the weird quick period where people thought that deals wouldn't go through during COVID, but the markets seemed to have recovered after June 2020. What if Adam had managed to survive, not done the IPO? Because that's how everything just came out in the open, right? That's how the whole house of cards comes down. What if he hadn't been hubristic? What if he had found a way to articulate his story? Isn't it very plausible we would still be just going down this road? Because if you give Adam a situation where his competitors, aka commercial real estate, are wrecked, I can imagine him telling a story that's 2 times the value you had before. Because the whole line of COVID is we all know cliches here. It's the business we're in. COVID has advanced the world 10 years. I could easily see Adam in an Israeli accent, I'm not going to affect here, saying, we were always going to beat commercial real estate, but now they're done. It's 2030. We're not worth $100 billion. So can you all because I think what I'm trying to get at here is what's so fascinating about this is so much of this is narratives. So much of this is narratives and how you're telling the story and how actors are thinking of the story. So can you just comment on that? I know you're not going to be able to perfectly articulate.
Oh, sure.
Yeah.
The hypothetical history that didn't happen is easy. So I'd say it could have gone in 2 directions. One, if they had just not IPO'd, there's an easy answer. If nothing else changed, they would have completely run out of money, and they did nearly completely run out of money to the point where they couldn't even afford to lay off their staff. They had to raise money to lay thousands of people off. So if nothing had changed, and then they would have gone bankrupt. But had sort of timing worked a little different, or had they been able to find financing, and the mystique of Atom kept along, or Atom waited until had the SPAC boom happened a year and a half earlier, you could see a situation where Atom would be selling the public markets on the same type of stuff that he was selling the private markets on. And, the SPAC boom, particularly earlier this year, was just, it was sort of like a SoftBank spread across all sorts of kind of crazy companies. Like, some companies are legit that are getting it and, profitable and make money. But a lot of them are like, WeWork had revenue. A lot of these companies don't even have revenue. Like, they're, Nikola, this truck maker that intends to make hydrogen trucks and an entire national network of hydrogen fueling stations, raised, like almost $1 billion, and was briefly valued more than Ford. Its founder took out $100 million. They bought a jet ski company. They bought a plane. He bought a plane. I mean, it was very similar to WeWork, kind of unfast forward. I think if they had sort of persisted and somehow managed to survive till the SPAC boom and keep the mystique alive, then they could probably be capitalizing on this era. The counter to that is, and this is a nuance, but like, one of the things that's changed and that's still chilly in tech land and startup land is companies that lose gobs and gobs of money. And that was, WeWork had that down. That was their thing. For a year that went by, they lost more. And even Uber was, curtailing its losses when it IPO'd.
Well, quick follow-up to the two of you. What makes the money run out when a company has revenue, right? Because what happens is, the more funding rounds that happen, the less control Atom has over the company, the more, existing investors are diluted. But it's just hard for me to imagine a world where let's say it's January 2020, Atom's running low on money. It's hard to see a world where he couldn't just find more money, given that, once again, WeWork has this the brand has value. It's not a random thing. It's not, Uber for cookies, which unfortunately did not quite build the august branding there. But I just help us I'm just trying to understand, I just don't see a world where people just say, you know what, Uber, you're just what people think of when they think of when it comes to, transportation. I just don't see anything here. So how does that work?
Yeah, I think it's pretty simple. Like, WeWork, at the rate it was expanding, it was losing on pace to lose like $4 billion in 2019. And, given that they're sort of intrinsically right now valued at about $8 billion of what was like under the Atom hype, you can't just raise $4 billion pretty easily. If you're an $8 billion company, you have to sell half the company. So like, the scale of their losses, they were just, spending it on ridiculous stuff. Like, this is one that didn't happen, but they tried to brainstormed about buying that Wu-Tang album that Martin Shkreli owned.
I remember that.
How much was that going for? This was
like $2 million.
Yeah.
What were they? What were they gonna? Okay, this is like what? So you're talking in the book about talking about like Sweet Green and working for Airbnb. I get those. What were they going to do? This is the question the audience is. What were they going to do with? Were they going to put it at the best WeWork? Like, what does that even look like?
Making an NFT, maybe, and then it would be worth like $100 million.
They just missed the trends there. There could have been there's like a bright shining moment where every single trendy Twitter thing hit at the same time here.
They're visionaries.
They invested in 2 coffee creamer companies that including one that was Adam's friend, Laird Hamilton. They found lots of ways to spend money, in addition to just being like really bad at running a co-working company. Like, they were not getting economies of scale in the way that you should at that size. They were spending air freighting couches at the last minute. Yeah,
those kind of things, I think. Just in one piece of the business, it sort of floored us, I think, as you talk to more people around just like the basic business of co-working and what they should have known how to do, like essentially like outfit offices, and like the waste and the excesses. And, they had a designer who just like they'd order tons of couches, and then he didn't like the like orange color. So he's like, send them away. And then if you work there, you could get this really like beautiful designer couch for like some cheap amount. because they didn't want them. So
if you like orange, that is.
Yeah,
That's funny.
Well, I
You know,
mean,
it's funny.
yeah, sorry, please,
Also,
sorry.
you guys are making me sad. I'm a huge fan of Laird Hamilton, so I didn't know that he was involved in WeWork, which actually makes me sad. But shout out to Laird and his wife Gabby. I think they're still very interesting. I guess my big question to both of you on this is it gets to something which I still don't really understand, which is, and I know this may sound weird, I get Theranos, and I know that there was dumb money behind it, but I get it. I'm like, blood test. There's a lot of, that's a huge market. I mean, if they're faking the results and they lie to me, like, how am I supposed to know? The only way I would not know is, and I guess that's really how they get fooled. They didn't do their due diligence, but I get it. Like, at the end of the day, it's a good idea. Marshall, to Marshall's point, I do get WeWork to a certain extent, but I remember thinking in like 2019 or something, I was like, this is just a commercial real estate company with the most ridiculous valuation that I've ever seen. I think Galloway actually wrote, I didn't even really know who he was, but I read his blog post looking there, and I was like, this is bullshit. I was like, this company is just like, and it seemed so obvious. And now that the documentaries have come out, I mean, if you've been to Israel, you've met Adam Newman's. Like, I watch his speeches, and I'm like, this. Like, smart people gave money to this, of him being like, we are going to change the world, and what was it, elevate the world's consciousness.
Yep.
And then he put his wife on the board. I'm like, if you're a billionaire, I've met some, they're not stupid people. To your point, these were some sophisticated investors. Why? Like, and I'm talking about at the highest rounds. Why? Like, what do they see that I don't? Is this just my cynical? Because I'm from media, right? Like, is this because like I cover media and I have to deal with these like idiot politicians all the time where everybody knows that they're lying and it's just like kabuki theater? But this is real money. Like, I have to assume that these people know something that I don't know whenever they're giving this person money. So this is to both of you. Both Maureen, you can start, but I want to hear what you have to say too, Eliot.
Well, I guess I'll start. I mean, just one takeaway we've talked about many times while reporting the book was like, things that seemed like they made no sense at the time. And there must have been like more, I mean, there's a lot more we found out, but sometimes things were as like ridiculous as they seemed. I mean, with Masayoshi Son, when he met Adam, other people, yeah, they met for 12 minutes. I mean, he did a 12-minute tour of WeWork, then got in a car on his way to meet Trump, right, as after post-inauguration, and decided he should give him $4.4 billion after they had passed on it before, and they were going to take over the world. And it's kind of crazy. I mean, just one thing I will say is, plus, as we talked about earlier, I mean, the private capital, it was so abundant. Everyone wanted to get in on the next big thing. But part of it was him always conquering new markets and saying, again, like, don't look here, look here. Yes, we got commercial real estate, but next we're going to own, real estate. We're going to do We Live, where everyone's going to live in a WeWork apartment building, which I actually think We Live still sounds cool, and I would want to live there.
That's a good idea. I would know, as a 20-something moving to a new city like New York, I think We Live is a really smart idea. There's not something insane there.
For $3,000 a month to live in a box? I don't know. All right, go ahead, Eliot.
So yeah, we'll pin in the We Live thing, but the basic answer there is economics. But yeah, I mean, I think that I don't know why do these people do this? It's really that bubbles warp minds, and when everyone's participating in a bubble, you sort of believe, and it's this kind of crazy thing where like the more a stock goes up, the more Bitcoin goes up, the more people suddenly believe it's going to go up more, right? Mm-hmm. Like if it's at 1,000, nobody really believes in it. If it's skyrockets to 30,000, then everyone's like, well, this is going to 1 million. So that doesn't rationally make any sense. In the same way that we cite this psychology study from like the 50s by Salman Ash. And I'll try to do this really quick, but like if you took one person and you show them 4 different lines and one of the lines is smaller than the other, and you ask them which one is smaller, they're like, that one. When you put them in a room of 6 other people and those 6 other people are all paid to say, they all look the same. The subject, the first person in the study, actually often comes to the conclusion, oh yeah, all these lines are the same. Because you just follow the crowd. And so if other smart people are in WeWork, if Benchmark, which is one of the best VCs in the Valley, it bought in because they really liked Adam, then, the later investors are like, well, Benchmark's there. They must really like the business. It's like, well, actually, they like the guy. And then, someone else is like, well, JP Morgan's in there. They must end Benchmark. Like, how could they be wrong? And then it becomes Harvard, and it becomes Jack Ma, and it becomes Steve Cohen. And so like you got these really good investors inside this really bad company.
Mm-hmm.
So I have these two last big-ish questions here. So question number one is, I'm interested, Eliot, in your usage of the term bubble, because what's obviously on the mind of our more tech and finance-focused people is probably something along the lines of, look, WeWork is a unique story in terms of how, and there's a reason why there's been a million podcasts, why Anne Hathaway is going to star as Rebecca. There's this whole big thing here, but in every single era, there's just like a big story. Some business is doing something, 50s, 60s, 40s, whatever. Does how insane WeWork got represent a bubble? Because a bubble makes me think of the dot-com bubble in 2000, where the entire industry goes kaput. But if WeWork isn't even a tech company, it's just a real estate company, like what does WeWork actually even say about startups? What does it actually really even say about the rest of the American economy? It seems a very weirdly isolated cases, because as we were joking earlier, there's just a bunch of these things that perfectly intersected. They gave us all plenty of material for podcasts and books and everything. But what does this really say about the bigger picture is what I'm getting at.
Yeah, I think it was like, particularly in the mid 2010s, extremely representative of a broad Silicon Valley private market bubble. And it's not one that popped with extraordinary, catastrophe. Certainly not yet. But among, there were all sorts of these companies that mentioned earlier, like Uber and Lyft, were able to raise billions of dollars for the same reason that WeWork was, because people thought that they were going to be much bigger than they actually were, and sort of didn't think hard about like, well, they seem to be losing money on every single ride. And then it's still a competitive market, even though when we initially invested in these car companies, we were imagining one of them would be the monopoly. And so like, why don't we compare it to something that doesn't make money, like an airline, but instead they look at it like a disruptive tech company. So like that sort of like, this can always be bigger than it looks right now mindset led to just like billions of dollars going into what were not terribly good investments. And, it also kind of created grilled cheese companies that raised money from tech to expand that didn't matter. So, I mean, that in the bubble sense, I think that's the type of thing that happened. And that's why Casper raised, hundreds of millions of dollars to have a mattress company that said it was a tech company. And that type of thing has cooled a little bit, but it's moved into sort of other areas, and SPACs are kind of principally one of them.
So here's something I'm wondering then, which is, when we're describing this era, WeWork, and this comes out in the reporting y'all have done, WeWork is very much a company that comes out of the post-financial crisis space, right? Like Adam actually tells the story in that sense. You've had American capitalism and world capitalism getting this big hit. So people are looking for a different experience. They're looking for this very opposite East Coast, opposite Wall Street bit here. How much, I'm not asking for a prediction here, because I'm just looking more for I'm curious from y'all's reporting, what are trends? How do you see the, knock on wood once again, post-COVID space affecting narrative shifts, right? So if so many of these companies and these founders and these firms are telling their story in the 2010s based on what happened in 2008, are there any trends or any things you're seeing in 2020 through 2021 that are impacting how we think people are going to tell these stories going into the 2020s?
I mean, it's playing out now. I mean, it feels like it's already playing out in a huge way. And this is like the immediate one, but I mean, Airbnb, look at their IPO. It was like, they had to raise money in March or April of 2020 at the beginning of COVID. Like the company was going to be done. And they had to raise money at like a discount. It was debt financing at really steep terms. But then, I mean, their IPO has gone crazy. And they're the post-COVID. I mean, we're definitely seeing a post-COVID comeback. I mean, we're all going to want to go to Airbnbs and fly and go back out to restaurants. So, I mean, there's a clear bet that investors are, racing into. And I mean, real estate alone, having our struggles to get an apartment right now, or living it with prices going up, and rentals and purchases. So, Eliot, what do you think?
Yeah. I haven't been paying super close attention to all this sort of startups bubbling out, but there's just a huge amount that in the buzz of the world on, the post, like the future of work. What's coordination, how many startups can you have that sort of integrate with Zoom, video conferencing? I don't know, but
a depressing amount, actually.
Right.
As someone who's been stuck in Zoom hell for a year, you'd be shocked at how many hellish workplace productivity connection tools I've been forced to use.
Totally. Yeah. But these big events do are sort of just symbolic mileposts, but also do sort of like set the scene for other things. They set the scene for how people raise money and spend the money too. So I imagine we'll be living in a sort of looking back in a similar way and finding the bubbly things that came out of the post-COVID era.
Great. Well, guys, I think we learned a lot more. I actually learned a lot more here about WeWork than I think we have in previous work. So this has been really helpful. So thank you. Where can people go and find out the book and both of your work?
We just made a website, and we aren't even paid to say we made it with Squarespace on a podcast, but we did. And it's cultofwe.com. And also, it's cultofwe.com. Or you can just go to Amazon. You can go to Penguin Random House and just look up Cult of We. There's no other books named Cult of We.
There we go. We'll have the link down there in the show notes on our bookshop as well. But really, really appreciate it, Maureen and Eliot. So thank you for joining us.
Thank you so much for having us. This was a lot of fun.
Thanks a lot, guys.